Tony Hall is Chief Investment Officer at Duet Asset Management, and he manages a $100 million Duet Commodities Fund, and that's returned over 30% this year. That compares with a mean return of less than 1% across commodity hedge funds tracked by hedgefund.net. Thank you so much for joining us. Now, 1,800 to 2,000 in gold. This would be on the back of a huge crisis, a huge recession, and therefore as a bet against all the volatility elsewhere, or do you think that it's actually because we're going to avoid the recession?
I personally think we're going to avoid the recession. I mean, gold is quite a chameleon in terms of what it's used for. If things are going well, then obviously it's an inflation hedge or a store. It can be a store of value. And as you mentioned, if we do have a crisis, in a safe haven. But when you look at the recent price action, we've had big problems and gold's come off quite hard. But I'm saying that's more of a healthy retracement rather than a change of the trend.
And so just talk me through, you're expecting, what, 1,800 by the end of the year? When are we going to touch 2,000?
I do think that the trend's still in place, and I still think, in the next 3 to 6 months, we're going to reach the 2,000 mark.
Commodities in general, in terms of what we're seeing for copper, again, that's come under a lot of pressure. We had that huge sell-off. You still believe that the trend is on the higher side, but is this longer term?
I think that's a much longer term trade. There's certain commodities where the fundamentals are tight. I mean, for example, the oil market is in a much different place than copper. So out of all the macro headwinds, copper's the one that's going to get punished the most. It's also where a lot of the fear factor is. I mean, a lot of people have bought downside protection in copper just in case we do go into a recession. So for me, that can's been kicked further down the road, and even though in the longer term, yes, sure, we feel that we see higher prices, we do feel that's the most vulnerable of the commodities at the moment.
Vulnerable also because of the possibility of a China hard landing, I imagine. This is something that a lot of investors are concerned. In fact, some of them expect growth in China to halve in the next 5 years. That would be a huge, huge problem for a lot of these base metals.
Yes, I mean, I think you have to put it into perspective. A lot of people complaining that China's growing at 8-9% rather than 11-12%, but it's growing on a much larger number. So, whether it halves or whether it gets lower, in terms of what's most important for us is the notional size. So, sure, they can grow at 5-6%, but in terms of the actual notional amount of copper, steel, etc. they're using, probably be the same, if not greater. In terms of them slowing down, I think that is not a danger. I don't think it's an incredible danger for us. And I still think the volumes and what we're seeing in the cash and physical market is still supportive.
So how much would you be buying of some of the other base metals, of precious metals? I'm thinking of the zinc, the silvers. We don't think about them very often, but would they be a great opportunity in this kind of market?
Yeah, for us, I mean, we have seen a retracement, and it was a violent retracement in the last month or so, but certain ones I think are an opportunity, such as the precious metals, the golds, the silver, the platinums, palladiums, etc., whereas others are more vulnerable, like the coppers. Out of all the base metals, I mean, we still very much like zinc, and you're getting to areas where we think that the top end of cost of production, which, as you can imagine, is a boundary condition that we keep a close eye on, and we make sure that we're accumulating, they're not cutting our positions.
All right, Tony, great to speak to you. Thank you so much. Tony Hall there.